Hello and welcome to BQ Prime. I'm Hiral Dadia. One company that is in focus is Wonderla Holidays, India's largest amusement park chain with over 2 decades of successful operations. To discuss, what's next for the company, joining us on the show is Arun Chittilappilly, MD at Wonderla Holidays. Welcome to the show, Arun, and always a pleasure to speak to you.
Thank you so much for having me on the show.
Arun, my first question coming to you is overall, if you see in terms of the third numbers, we've seen a good performance that has come in there. What's the plan from here on? Because clearly the existing repertoire of 3 parks is something which is expected to be augmented by 2 upcoming parks in the next 2.5 years.
Yes, that's correct. We are adding two new parks, one in Chennai and one in Bhubaneswar. The one in Bhubaneswar will hopefully be done in about 20 months' time from now. Chennai, we are still on hold a little bit. We are waiting to hear from the Tamil Nadu government regarding the local tax issue. Once that is resolved, we will start work, and again, within 2 years, we will be able to finish it. But we do see maybe another 6 months delay there, but that's about it.
Right. So in terms of Bhubaneswar, it's on track to be operational in FY25, right?
Yes, that's right.
And what's the kind of revenue addition are we expecting on the back of the Bhubaneswar park?
See, Bhubaneswar Park is an asset-light model, and we are not expecting the same numbers as our larger parks. We will be doing probably like half or maybe two-thirds of revenue of the current parks. To start off with, we are going to start off probably with maybe about 40% of the current park revenue. Yes.
Right. And overall, how is it different in terms of, as you mentioned, with regards to Bhubaneswar, it's going to be an asset-light model. So how is it going to be different fundamentally?
So it's a smaller park because for us, Bhubaneswar and cities like Bhubaneswar, Indore are smaller cities, tier two cities. So the investment we are making there is considerably smaller. Like our bigger parks cost upwards of 400 crores to construct and operate, whereas Bhubaneswar Park will be under 150 crores. So that's much lighter, park in terms of capex. Also, in terms of rides, we will have a large variety of water rides, but then the more expensive and larger, land rides, which like roller coasters, those will not be there. But we will have a selection of good rides for those that park as well. So we are looking at, and also the pricing also will be different. Like for example, our Bangalore is priced around 1,200 to 1,600 rupees. Bhubaneswar will be considerably smaller in terms of ticket, the ticket size. And so yeah, we're looking at about 800 to 12,000 kind of pricing for Bhubaneswar. The pricing will be it will be much more affordable. But at the same time, in terms of F&B and non-ticket offerings, it will be at par with our larger parks. So that's the way we are planning. Yes.
Right. And overall, you're already in talks with multiple other states as well to set up similar parks, right? So which are the
That's correct.
states that we are looking at, number one? And what's the kind of time horizon we have in mind with the states which we are in conversations with?
So, Bhubaneswar project was, the talks were initiated by the government of Odisha. I mean, in fact, they invited us in 2019, way before the pandemic. But unfortunately for us, during the pandemic, the whole process got stalled, and now we have revived the process post the pandemic. Now, other states seeing they have invited us. For example, the first one was Madhya Pradesh. So we have been talking to the Madhya Pradesh government to do a project similar to the one in Bhubaneswar, and we are looking at Indore as the probable city. I've already made a visit and we met the government officials, including the chief minister, and they've been very proactive. So we might more likelihood of us doing something there, within the next 1 year. We will have some clarity on that. We are waiting, to hear on, the land acquisition and those kind of things. The government is proactive. So that is one state. Then we are looking at Goa. We have been talking to the Goa government as well. We want to, go to Goa in some form. The other government that we're talking to is Punjab and Uttar Pradesh. These two are there in the northern area. Punjab, we want to do something in the outskirts of Chandigarh or Mohali. Again, these are very early level discussions. Nothing has been formalized. UP also, we've just had one meeting, but they have been very proactive in following up with us and trying to see how the investment can be made quickly. But these are, again, only early level discussions have happened, and so we don't know what is the exact timeline at this point. Yes.
Right. So, with all of this said and done, another aspect what I want to talk to you about is with Kochi, Bangalore, and Hyderabad, right? These are places where we have existing parks. Overall, in terms of the total land available to the developed land, it's not completely utilized. So, is there any plans of expansion in these three regions?
Yes, we are constantly expanding our parks. For example, we are looking at some big capex happening in our Bangalore, Kochi, and Hyderabad parks in terms of new rides. So every time we add a new attraction or a new, for example, a new restaurant or an F&B facility, obviously we'll be adding more and more space into the park, right? And also because we've had such high footfalls in the last 1 year, there is a need for us to expand. Our parks are practically running full
Mm.
during the season time. So there is a space constraint, especially in Cochin, which is our oldest park. We do have a space constraint currently. So we will be adding more and more of this property that we have into, into new rides and attractions, F&B, retail, all those kind of things. Yes.
Right. And overall, from an ARPU perspective, we've seen almost a 7% CAGR growth in the last probably, I mean, a good growth coming in terms of 21, 22, and now 23 as well. So
Mm-hmm.
taking, and previously, if you see from FY9 to FY19, it was a 10% CAGR growth that we'd seen in terms of the overall ARPU. So from here on, do you think we'll be able to get back to the 10% CAGR growth in terms of ARPU, number one? And do you think the non-ticket revenue is something which will be able to increase from here on as well?
See, every time we add new attractions and increase our offering. I mean, finally, the customers needs to see value in terms of what we are offering, and that is the only way we can increase ticket prices. But we have been very consistent in that we have always added new attractions. First in India, or some attractions are very unique to just Wonderla parks. So we've always and our constant endeavor is to add new attractions, and we are continuously adding that. So every time we add new attractions and new facilities, we will, change the ticket pricing, because that's the only way we can also monetize it further. So we are looking at, if you look at the last 2 years, our ARPU has grown up much faster than 10%. I think this year has gone up all by 20%, if I'm not mistaken. So that's because we didn't take price hikes in the first year of post-COVID, because there was heavy discounting just to get the crowds back into the parks, things like that. So now we are, comfortably out of that phase, and we are seeing huge demand. So obviously that means we can increase, our ticket prices. Going forward, also in the coming year, we are expecting a 10% increase in our ticket, ARPU rates. Non-ticket revenues is an area of focus for us. Like I said, we are constantly changing or improving our F&B and retail offerings, and we want to make sure that we get to a 70-30 kind of ticket non-ticket split. Currently, it's 75-25. So another 5% improvement we want to do in the non-ticket in the next 2 to 3 years. I think that's entirely possible, and we are working towards that. And we have also strengthened our F&B and retail team as such. We have a larger team looking into this. And also we are experimenting with new offerings in terms of, Ride Plus activities, events. All this comes under non-ticket. Resort also has been doing very well. We are expanding. We are planning to expand the resort in the Bangalore park, because we've been running full pretty much the whole of last year. So there is a dire need for us to expand there as well. Once we do that, obviously we'll be looking at doing resorts in our other parks like Kochi and Hyderabad. We don't have currently resorts in these parks, and slowly we want to do that in all our parks.
Right. And from a footfall perspective, what is the utilization currently, and how do we see that improving?
See, footfall, I've always said, maintain that each of our parks can handle more than 1 million visitors. And this year we have, we will definitely break that. It's been in that sense, it's been a record breaking year. We will cross 1 million visitors in all our 3 parks this year. It has not happened in the last 3-4 years, actually. So it's nice to see that footfall's coming back. But like I said earlier, we also keep adding attractions. So, the more attractions and facilities that we add to the park, our capacity to hold more people also increases. So if we can hold 1 million people this year, if we add a few more attractions, we can, maybe hold more people. So we don't see that being a roadblock unless there is a huge jump in footfall. Then obviously our customer experience will suffer. We are currently running at about average of about 3,000 visitors per day. Our parks can handle about comfortably 6 to 7,000 visitors per day. So that way there is more headroom for us to grow footfalls also.
Okay. And overall, what's the strategy in terms of add-on events, etc., to help cushion the overall ARPU?
So what we are doing currently in terms of improving ARPU is, one is ticket price hikes and new attractions and differentiated pricing. We also have more VIP and fast track tickets, and we want to add more there because I think there is an opportunity for us in terms of adding different types of experiences. So that could be one. The other thing was, like I said earlier, F&B and retail offerings. There is still a lot that we should do. Currently, our F&B and retail spends are very small. I think it's about 160, 170 rupees for F&B and 130, 40 rupees for retail, which is very small. So I think there is a lot of improvement that's possible, especially in the non-ticket spend. So we are focusing on that.
Hmm. Right. And overall, from being an asset-light model, what I understand is where you're actually tying up with the government, where the government will provide land on a long-term lease, right, at a reasonable price to promote
That's correct.
tourism. Now, if that's the
Um,
case, yeah.
Yeah, sorry. No, so we are looking at multiple models. So, like some governments have been very forthcoming and giving us properties at very small lease rentals, because I think there is a lot of push from state governments to increase tourism offerings in their own respective states. In that sense, I think Wonderla has also been quite well placed to exploit that. And every state is being very aggressive right now in terms of getting new investments. And we also create a lot of employment in the local areas. You know, so in whether it's F&B, retail, housekeeping, security, we do run a large operation in terms of number of people who work in our facilities. Each of our parks employ more than 500, 600 people full time. So, and another 1,500 people indirectly. So almost 2,000 people get employment from our parks. So that I think is very attractive to a lot of people, and that's why we've been invited by many state governments. Some governments are looking at lease. So in some places, we actually have to purchase the land, or at least do lease with smaller private players. So there are different models that are coming out. We are still evaluating.
Right. So overall, any number that you could give us in terms of by how much will it reduce the upfront capex cost?
See, for example, in Chennai, we spent almost 90 to 100 crores on land and land development alone. So that is the amount that we are going to save, if we get state government support to set up a park. So that is a huge saving for us, because the real estate cost is a huge factor in building a new amusement park. Of course, it will be smaller in it may not be 100 crores in a smaller city like Indore, but still it will be still a sizable amount. At least 50, 60 crores we will be able to save per project. So that's a big saving for us.
Right. And with regards to the in-house manufacturing facility as well, now that's as an advantage to a company like yours, right? So overall, what's the expansion plan from a manufacturing perspective? Because one is that upgradation in terms of technology is needed, in terms of the new rights that come in is needed. And the second option is, if you're not domestically producing rights, then you're probably buying them and importing them. So what's that strategy now going to look like from here on?
See, we've always almost 40% of all our rides and attractions are completely made by us, which is unique for Wonderla. I don't think anybody else is doing that. And this is something that we've been doing ever since we started into this business 22 years ago. And we continue to do that. For example, in Bhubaneswar, I think almost 80% of all the rides will be in-house rides. Of course, we will also have some very unique foreign and imported rides, things like that also. But over the years, we've been able to, make these rides in India. So it's starting from small rides, kiddie rides, to VR coasters. We have developed our own roller coasters, VR rides, all kinds of attractions. We've been water slides. We have done a lot, and so we will continue to do that. But we also have good vendors who we have good relationships with, and they are international and Indian. So it's always going to be a mix, and every park we want to make it unique as well. So it's not possible for us to make everything in house. We do. It's always like a mix and match. Yes.
Right. Overall, what's the kind of growth that we're looking at, say, in terms of a milestone? 3 years from now, taking into consideration that FY25 is when we actually see one of the plants that is operational, and Chennai, as you mentioned, might get delayed by 5 to 6 months. So if you have to look at FY25 and 26 as a key milestone, what would that look like?
See, by FY25 and 26, we will have another 2 parks operational. That I think is the way we are looking at it. So in Chennai will be a larger investment, and Bhubaneswar will be a smaller investment. And within the next 2 years, we will definitely firm up another 2 parks at least. So once these 2 parks come on stream, we will also, by that time, we would have already started work on another next 2 projects. So we want to do 2 projects simultaneously at any given point. So I think if we continue like that, we will have at least another 4 or 5 parks operational in maybe 10-year horizon. That's the way we are planning it. Of course, reality, we will have to see how it pans out, because there's a lot of processes involved, including land acquisition, say actually setting up the park, a lot of approvals, importing rides. So a lot of these things can get delayed. So exact timelines are hard to predict. But we are reasonably confident that we can do 2 projects simultaneously, and if that is the case, definitely we'll be able to at least double our footprint in the next few years.
Right. And are we going to fund all of this expansion in terms of internal accruals?
Immediately, we are not looking at raising money, because we do have internal accruals which we have earmarked for Chennai and Bhubaneswar. For these 2 projects, we don't see any fundraising that is required. But of course, when new projects come into the scene, of course, we will have to raise money at some point. We are debt free, and so we can always raise debt, and we are also open to adding another equity partner also. So I mean, we have not started any of the formal processes yet, but as and when we have more projects, we will look at fundraise as well.
Right. And overall, Arun, very lastly, in terms of the improvement in terms of the ROCE as well as the ROE, by how much are we expecting it to improve? Do you think we will be able to maintain above the 20% mark with the shift to an asset-light model?
See, every time we add a new park, and there is capex involved, obviously the ROE and ROCE could come down. So it's hard to predict how it will play out, but our existing parks are almost fully depreciated, so obviously the ROE and ROCE will be very high. New parks will not have that. There will be a ramp up for that. But the way we design our parks and build them at a very cost effective manner, I think our ROE will be high, and also doing it in an asset light model should help us and have that unique ROE capability. Which I think is hard for our industry, which is a very high capex industry. So so I think we should be able to maintain good ROEs going forward as well, and of course that's what we aim for.
Right. All right, Arun. Thank you so much for speaking to us at BQ Prime, and good luck for the coming quarters and the new parks as well. Thank you. Stay safe and speak to you soon again.
Thank you so much for having me. Thank you.
Always a pleasure.